So highs and lows. Highs and lows are another foundational aspect of a chart. You really need to understand highs and lows of the chart because technical analysis wise, these are what a lot of your trades are going to be based off of. So let's start with highs. A high occurs when price pushes to a level that it has previously been trading beneath in the recent past. There are multiple types of highs within a chart, such as higher highs, lower highs, major highs, and minor highs. So what do I mean by that? This right here, right? This is a higher high. A higher high indicates a high that is higher than any other of the previous highs. You know what I mean? It's exactly what it sounds like. So the reason why this is a higher high is because this high right here or right here is higher than this high right here, right? You can even say that this high is a higher high compared to these highs right here, right? So that would be an indication of a higher high. Then price goes up higher and higher and higher because these are bullish candles. So price is going up, up, up. This is another indication of a higher high because this high is higher than these highs right here, right? So they're going higher, higher, higher. This up here was the highest high or a major high before price retraced and went back lower and had a pullback, right? Right before price retraced and went lower for a little bit. Then after we retraced, we go a little bit higher and we made this high. And this is considered a minor high because this high is lower than this major high, right? Which is why it's a minor high. It doesn't hold as much weight, or if price breaks above this, it's not as important as if price was to break above this. Because if it does break above this, there's still resistance because of this point up here, right? So that's why this is more major or more important than this. So we start to follow the chart, we start to follow it, boom, 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 boom. All this is happening. Then we make a new high, a new major high above this major high. So now this, I'm not gonna say this point is irrelevant because it's not irrelevant, but this high is more important than this high now, which is why it's a new major high. Down, coming down, because this is a pullback retracement, come back up. Now this high right here is a lower high because it did not break this major high. This is still the major high. And because this is lower, once again, lower high, this is also considered a lower high. Like a minor high is considered a lower high. Whichever way you want to categorize it, it doesn't really matter. But this is a lower high. And so lower highs are important because that's where you start to understand and pick where major trend reversals begin to happen or where reversals or pullbacks begin to happen. Because price couldn't break this point, which means that there's resistance or like an area of the chart where price does not want to break above, which means that price doesn't want to go higher, it wants to go lower, right? So that's why lower highs are important. Then we got a pullback to more of a little price action. And this right here, you see how this high slightly above this high, slightly, just a minor high though. That'd be an indication of a minor high. You could say it's a lower high as well because this high is lower than this high, but we're just gonna categorize this as a minor high. And then, price is still pulling back, going up, pulling back. And then we got a new major high, right? So now, we don't know what happened after this point right here, but as of this point, this high is the most important price point of this chart. All these highs are important, but this has more weight than all of these highs altogether. But also, all of these highs right here are points of support for the future. And what I mean by that is something I can show you here. So you see how this major high went higher, boom, than this high. So after this major high, we had a retracement, right? Even on this retracement, look at where price bottomed out at. It bottomed out near that minor high and near that major high, right? So that's why it's important to understand higher highs and minor highs and all that because they act as an area of support where a price can potentially bounce off of. And that's exactly what it did in this situation. Price hit this area right here and it bounced off of it multiple times. If this was a day, throughout the day, it bounced off of that high and that high multiple times. And you can say this high too. Multiple times. So we don't know what happened after this. It did look like it was going higher, but let's just say that hypothetically speaking, price started to come down. There's a good chance that price is either going to bounce off of one of these highs or one of these right here, one of these low, the support area, which was bounce off of these previous highs as well. And this slide pretty much goes into what I was just talking about the support and resistance of highs. So Highs create resistance or support for future price action. If price is continuing to make more highs, then price is in an uptrend. See uptrend video. At this point of the course, you haven't seen an uptrend video, so you don't know what an uptrend is yet, but just know that price is going higher, it's making more highs, then it's going up, like price is going up, which indicates an uptrend. But there will be a video on uptrends that you will be seeing later on in this course, so don't worry about that. One will find that there are always various highs achieved throughout the analysis of any chart, but some highs are more important than others. And that goes into what I was talking about before. So like major highs are more important than minor highs, right? But they all have a level of importance. So let's start from the beginning. You always read charts from left to right. So at one point, this was the high of this chart, right? Because all this over here hadn't happened yet. This was the high. Price starts to come up. It tries to break this high, and it does. But it retraces because highs act as resistance, right? They create resistance for future price action. So breaks it high, goes lower, breaks the high again, creates a higher high versus that high, and goes a little lower, and then we begin to go higher again. So we're going higher and higher, higher, small retracement, and going higher, higher, higher again. We make a major high, which is the high that you really need to pay attention to because it's the highest high that the chart has made at that point. Then we have a somewhat significant price drop or a pullback, and you can see how this pullback, it bounced off of these highs. Like it didn't touch this area of where these highs normally were. From this minor high, we had somewhat of a significant price drop or pullback, right? And this low right here, it didn't quite touch these highs. Like it didn't go as low as these highs, but you can see how it kind of bounced off of these highs right here, right? Which is why highs also act as support for future price action. Just remember that. I'm telling you, this is super important stuff. If you can understand this, you will be able to make money. From this retracement, we go up higher to make this minor high. Then price action is doing whatever it's going to do. We break that minor high to go up to try to touch this major high. We break the major high, but you see how highs create resistance for future price action. This major high created resistance. Price, I mean, it did break it, but instantaneously pulled back. Right? And this is why waiting for the close of a candle is so important, because had you bought on that break of this, right, on either one of these candles, had you bought that break, you would have lost money because the candle didn't ultimately close above that high. It closed lower, which is why waiting for the close of a candle is key in all this. You really need to know, you really need to wait for the close of a candle. And you see how much pressure this major high caused. Like, it couldn't break it this time convincingly. It couldn't break it this time convincingly. It took multiple times for this major high to be broken. But even before we made this major high, you see how when prices were tracing, we bounced off of this minor high, which was also a high right here, right? Which is why I'm saying highs create support or resistance for future price action. You really have to pay attention to the highs because that is where price has a significant potential or chance of bouncing off of that area. So price did bounce off of this area, this minor high and these highs up here to go up and make a new major high. So now this major high is not as important as this major high. This is the high of the chart that everybody is paying attention to. This does have some relevance. It's still going to create some resistance, but this is the point that everybody's paying attention to. Then price actions do whatever it wants to do, blah, 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 blah. And then we go to make a new high. But throughout all of this, you can see how price really did bounce off of these highs, the previous highs. Go up, boom, bouncing off of this high. This is why highs are so important to understand because they create areas where price has a potential to react off of. And reaction points are everything. They are what you're looking for.
Hey, what's going on, y'all? I just want to give you guys like just a little update because I didn't mention this in the video. I am releasing my full day trading course or just like candlestick reading course on YouTube, like the full thing. I did it a while back and I just want to release it for everybody to have because I feel like it's really useful information right now that like everybody can benefit from if they want to understand markets, like basic knowledge of markets. And it will help you so much. I'm releasing the full course on YouTube. There's going to be a playlist in the description. So just check that out. And it's going to be everything releasing over the next month and a half or so. And like I said, it's going to be everything you need to understand the basic knowledge of, the market and understanding candlesticks. Because with this knowledge, you will be able to read any market as long as you can see a candlestick chart for that market. It doesn't matter whether it's a stock chart, whether you're trying to trade like Amazon or Tesla or something like that. It doesn't matter whether it's a Forex chart, whether you're trying to trade, euro versus the dollar or or a British pound versus a dollar. It doesn't matter if you're trying to trade gold. It doesn't matter if you're trying to trade silver. It doesn't matter whether you're trying to trade Bitcoin, XRP, Ethereum, fucking corn, wheat, oil. It does not matter. As long as you have a candlestick chart that you can read, this information will, in my opinion, benefit you in a very great way. So if you want to learn more, just check out the free course. And like I said, everything is there. It's the full thing that I made. It's like over 18 hours long. You don't have to watch the whole 18 hours. It's whatever you want to do. But I'm putting it all out there for you. So if you want to watch it, then cool. It's going to be out there. Just check the playlist underneath in the description. And yeah, hope you guys enjoy. And I hope you guys are having a great day. Back to the video.